Hey everybody, hey, good morning. This is me, Darius Anucauskas, and this is a quick video preview for the webinar, which is going to happen in a few moments. So do not tune out because we're going to talk markets, and there is a lot to talk about. We have the BoJ, we already came out. We have the EU CPIs that are coming out as well today. So hey, keep your eyes on that. But most important probably is the event which is happening later on, and that's the interest rate decision from the Federal Reserve. So I will about all this and a little bit more in my webinar right now, which is going to start in a bit. And yeah, hopefully you'll enjoy it. Please do not hesitate to ask any questions. I'll see you in a bit. All right, okay, ladies and gentlemen, hello, and good morning. This is me, Darius Anucauskas from Markets.com, and I'm the global analyst here. Look, today's Wednesday. Today is midweek, so we have quite a busy day, I would say. But look, about all that and a little bit later. For now, let's have a quick read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I will adjust my microphone here a little bit so that it would be pointing towards my face. Yep, there we go. So, right, ladies and gentlemen. Oh, no, just a second. This is always that issue where to clip the microphone on. So yeah, now, look, also just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, right, now then, let's have a look. The first one I want to pick up here is Nikkei 225. And before I go any further, good morning in the chat room. Good morning, everyone, as always. Yes, I mean, I'm welcoming everyone, and I hope you're all feeling nice and relaxed in a way. I know it's midweek, but hey, hopefully you're not stressing out too much. So yeah, like I said, Nikkei 225. So this morning we had the BoJ that came out with some interest rate news, and basically, yeah, the bank kept the rate unchanged at plus 0.5%. So as expected in a way, so nothing major there. But certainly, yes, the bank officials kind of made everybody worried a little bit, in my opinion, because but again, everything is kind of really explainable, understandable. Because why I'm saying that they made a little bit of everybody worried, because again, they're afraid that the tariffs again. I mean, everybody's living right now in this unknown. Will there be some more tariffs or not? What will the current administration will kind of say again. It's like this uncertain world that we're currently going through, and I think that's not helping a lot of central banks. And one central bank that we're really keeping a close eye on today is the Federal Reserve, but I'll get to that in a bit. So yeah, today, like I said, we got the BoJ, and those guys there are a little bit worried that there could be some tariffs on Japan, and the economy and Japanese economy, which is heavily dependent on exports, might not really play out well. So although the bank is very much in favor of hiking rates further, still, I think at this point they have to take a bit of a cautious approach on that one, because again, yes, there we are seeing inflation picking up again. So, and we know that inflation is coming out on Friday in Japan, so we're going to get that rate. So current inflation is around 3%. Okay, we have a forecast of a lower number. The same for the headline number, for the core number is a lower number. For the headline, we don't have a forecast. However, I'm looking at another source. Let me just quickly check another source, and I think that the inflation year on year is expected to, the headline one is expected to come out a little bit higher at 4.2. Now, will that be the case or not? We'll see. But in general, if we do see the number, let's say the headline comes out at 4, the core comes out at around 3%. So that's kind of in line with the initial BOJ's idea of going and hiking rates further. But now, given that there is this threat of tariffs, and that's where the the pause might come in. This is where we could maybe even see a cut, but let me just have a think about it. No, you know what? A cut probably would not happen because, again, the bank is having its state, it's in this mode where it wants to maintain inflation, because if inflation starts picking up, yes, we have a little bit of a forecast of on a lower side, but if inflation still remains elevated, they will need to kind of battle that one, and they need to hike rates. And this has been, like I said, the agenda of the BOJ for some time now. But again, they're a little bit in a pickle. So what to do? Either to lower down interest rates and support the overall economy. However, then you have a problem. You could have a problem with the yen, Japanese yen, which could spiral downwards. But at the moment, we're seeing the Japanese yen is kind of a little bit on the stronger side, which is fine. In a way against some of its major counterparts. I'll jump into Forex in a while, but yeah, I mean, like I said, it's always like a battle what to save, to stimulate the economy, or actually to or to save your currency. So we know that the Bank of Canada kind of they already know the answer for that one, and they have stuck to the fact of just stimulating the economy, and whatever happens with the CAD, we'll deal with that later. At least that's what I'm getting from, So long story short, for now, looking at this technical picture here in the Bank of Japan, what can I say? It's we've tested this downside line perfectly, and I said to you, and I talked about this, and I said, look, yes, I'm going to consider a bit of a move higher, but I'll consider this as a temporary correction before another possible leg of selling, because again, we have this downside line, we have the EMAs. In a way, this could provide that good resistance, and it did so, and we're seeing a drift lower. However, am I getting bearish? No, not really, because I need to see a drop somewhere back below this 37,270 zone in order to consider some moves lower. And then, of course, we will keep a close eye on the where's that line? Where's that magnet? There we go. On this little hurdle here, the 35,970, or in general the 36,000 mark. We'll keep an eye on that one. If that gets cleared, of course, we'll go further south. But at the moment, let's go slowly on this one. 37,270 area-ish. I'm looking at that one for the downside, but for the upside, well, like I said, a clearance of all these, the downside line, the EMAs, and the 38,260 zone here somewhere. Yeah, I would prefer to see something like that. China 50, let's have a look at this one. This one is holding on nicely. I mean, there is still positivity around this, because again, the Chinese government came out saying that they're going to be stimulating and supporting the economy, so we could expect even lower rates. Where's that PBOC? Where's that PBOC? It's coming out on Thursday, if I'm not mistaken. Let me just double check. Yeah, there we go. That's tomorrow. So keep your eyes on that one, because I talked about this on Monday, and what I said to you, that look, at the moment the forecast is for the same 3.1, 3.6 on the 1 and 5 respectively, 1 and 5 year respectively. Look, if the current rhetoric is that they're going to be supporting the economy, I wouldn't be surprised if we somehow see a little drop here of 25 basis points on this one and on that one, then there would be, like I said, it could be quite an interesting move here. So what can I say? At the moment, I am just being very careful, very cautious, and if we do see somehow a magical drop in the rates, then hey, I could aim for this nice downside line taken from the high of the 8th of November of 2024 and I would be very happy. So I'm not really targeting something higher, although yes, it would be nice, but at the moment I'm taking it slowly. We didn't reach my target of this 13,716 zone right here, but I think it's time to get rid of it. I think it's just time to mark the current highest point of this year, which so far is doing a fantastic job, providing a great resistance near the 13,815 zone. Nice good clearance of down would confirm a forthcoming higher high. This idea, it seems to be working out. I said on Monday that, look, even if we do see a retracement, as long as we stay somewhere above this 13,483 territory, I'm still somewhat positive. And I think, like I said, I think I'm going to stay for now positive. Let's jump into the US. Now, with the US, look, at the moment, we're a little bit on a roller coaster ride, and yesterday we closed in negative territory. Dow closed in lost around 0.62%. Nasdaq lost around 1.71%. Then the S&P 1% and 7, something like that. Russell was Russell 2000 was the biggest loser. But anyway. Look, in general, this is working out somewhat. So the 200-day EMA provided good resistance. I said previously that if we do pop back above the 41,700 zone, I will consider somewhat of a move higher. And this is what, in a way, I got, but I would say I got it. I got it a little bit like. Not as planned, I would say, because I was kind of hoping to see, maybe a clearance of that 200-day EMA. But okay, you know what? That just kind of tells us, what, we need to regroup a little bit. And I think that what we need to do here is to wait for a pop back above the 200-day EMA. If we can get that move, amazing. More buyers here could join in, potentially attracting, or not attracting, but let's say creating a possible move towards these other EMAs, the 150-day EMA. For now, the fact that we're dropping back down below this lower side of the previous range, okay, that's a little bit of a negative thing. However, if you're not really comfortable with this right now, honestly, I don't blame you, because I would probably stick to this. I would take a very conservative approach here on this one and wait for a drop below the 40,650 zone before, let's say, getting comfortable with some new levels. Now, this would confirm a forthcoming lower low, and of course, yes, potentially attracting more sellers into the game. S&P 500. Look, because we have the this major organization, if I may call it this way, the Federal Reserve, coming out with an interest rate decision today. Of course, there is no expectation for a cut nor a hike. You can see here by the FedWatch tool. On the FedWatch tool, and the main event, or the main focus is on the like what's going to happen, how many cuts we're going to have by the end of this year. And looking at this, we are shifting now towards 2 cuts only. So if you remember, last week even I was talking about this, and I said that, look, we have this idea of having 3 cuts by the end of this year. And I keep on saying for a while now that, look, it's all good. It's all okay. I mean, we'll have these changes here and there this will change probably after today. Either this is going to spark higher, or maybe we'll shift back into, this having 3 cuts. So the most important, what we're watching today, is not the interest rate decision itself, but the press conference. So because it's going to be interesting to see if the Fed or Jerome Powell will be more in favor of, let's say, going for some more cuts and stuff. So we need to listen to that tone and to see how that's going to come out, and how he's going to be saying all this. Because if he's going to say, what, I think there are some challenges that we are seeing, so we believe that cuts will remain on the table. So maybe that could help bring the stock market back up a little bit. So that the new administration could bring it down again. So yeah, at the moment, what we saw here, so from, let's say, we're looking at the S&P 500 here. So from the current all-time high and drawing to the current lowest point of March, we did do the 23.6 here retracement on the Fibonacci. Maybe this, like I said, this this 38.2 kind of, it looks a little bit better, but what can I say? This 200-day EMA is something that I am watching very carefully. So hey, long story short, I will wait for this one to make a move of some sort, like, or actually, you know what, I'm going to wait for the Fed. That's period, kind of, in a way, that's the most important. I will wait for the Fed. And in a way, if you're trading today, if you're trying to trade the futures here or something, or you're trying to enter a position before the Fed, honestly, I strongly recommend not doing that, because look, you're just going to get yourself in a ditch. It might, before the Fed, it could just go up and down and sideways, and this is something that I want to avoid all the time, and I don't like this. So I just kind of stay away from it. Honestly, believe me, after the Fed, and even the next day after the Fed, you will see some nice opportunities, because what we need to see here is we need to see the market stabilizing a little bit, and kind of, we can go from there. But at the moment, I would say just be careful, be cautious, and I would say just be a little bit more on the safe side. So do not do anything before the Fed, and even after the Fed. Only do something if you're comfortable with that. If not all of your boxes are ticked, don't enter anything. Let's jump into NASDAQ 100. So of course, this one still oscillates around the 23.6 here on the Fibonacci retracement, which is drawn from the lowest point of October of 2022 to the current all-time high. So what we're seeing here, yes, we're seeing that oscillation moment. Is this something that is helpful? No, not really. So again, the same story. I think I'm going to take a very conservative approach here, and if I want to look at some lower levels, a drop below the 19,100 zone is needed. And for the upside, again, I might put this target here, the 20,000 zone, but I think that the better option here is still to wait for a push back above the 200-day EMA. I think this would be a little bit on the safer side. So yeah, again, if you feel comfortable around this 20,000 zone, okay, feel free. But the problem that I have is like I said, the 200-day EMA, which is just a little bit above that, which could provide some resistance. So let's jump into the German index and DAX. Let's have a look at what's happening here. And boom, there we go. Look at this. Did we create a new all-time high? Let me just double check. Ooh, no, we came very close. Look at this. Look at this spectacular move here. Look, in general, with the German DAX, we know that this positivity was kicking into into the fact that there was an approval of the budget of to kind of to increase the military spending. What can I say? Right, okay, yes, there will be beneficiaries like companies like Rheinmetal, there we go, this one. So, which is, on fire and loving the fact that, there's this approval of this budget, because again, look, the biggest military builder, in Europe, this company, of course, there we go. Look at this. Look at this hyperbolic move. I mean, war is always profitable, right? I mean, war is just something that everybody is, happy about. Like, in a way, these companies that are building military equipment. And I mean, look at this. This has, since the beginning of the conflict back in February, right? This is when the company jumped, and it was around $100, just a little bit less than $100. It popped. It gained 50% straight away. So from the beginning of the war, let me just grab the. So let's say we're here at the end, before the beginning of the war, and up until today. I mean, look at this. Look at this staggering percentage gain. I mean, wow, almost 1,000% in what? In 3 years? I mean, look, don't get me wrong. The higher you fly, the harder you fall. I mean, at one point this will have to go down, and honestly, wow. I mean, this is just crazy. Look, what can I say? For now, we're watching this animal, this beast, flying further north. Of course, DAX, that's why, DAX is also flying higher. But again, at some point, this will have to reverse back down. And if suddenly there are, like I said, there are shifts in the budget or something, or, somehow there is some sort of, like I say, let's put it this way. Apparently, a ceasefire is not profitable for anybody. And, as sad as it sounds, but it's the harsh reality that these are the companies that are profiting, and unfortunately, the only people are suffering. So, long story short, what can I say here? At the moment on DAX here, I'm looking at this barrier, this current all-time high. If we can get a nice clearance of that one, great. I'll go for some higher levels. But at this point, we're seeing a little bit of a retracement here, but I'm not getting bearish yet, because my bearishness could come on a break below this upside line, below that 22,850 zone. If we can get a nice clearance of that, great. More sellers here could join in. But all this area right here, up until this upside line, I'm just observing the price action. Now, in terms of the economic calendar on Wednesday, look, the interest rate, the inflation number is coming out. So it's coming out soon. At the moment, the expectation is for a little bit of a lower number. My problem with the numbers here is that most of the time the European numbers come out as expected. If it doesn't come out as expected, that's where the shock, where the interesting bit comes in. And at the moment, yeah, it's coming out like as expected. And let's see what's going to happen, if it's going to be the case or not. But again, like I said, history shows me that most of the time they're spot on. However, the interesting bit, like I said, is if it deviates a lot from the forecast. Now, that's where the spectacular moment happens, and this is where you can see some volatility. So if we do see the numbers actually falling further south, then maybe this could support more the ECB for going for more cuts. And as we know, the guys there are quite in the mood of cutting. But look, since last time, they went for that 2.65 rate. They cut the rate by 25 basis points. And the next meeting, when's the next meeting? Will be I think it's going to be later on in April, if I'm not mistaken. Ooh, yeah, I need to double check that. Honestly, I'm not gonna lie, but yes. But the other one is also expected to come out on the lower side a little bit. So let's see what's going to happen there. But look, at the moment, we're watching the inflation numbers today, which are coming out. So keep your eyes on those if you are trading something European related. Very quickly on the FTSE 100. So yes, the situation here is that we are watching this one kind of correcting back down a little bit, so that's fine. Cigar on rocks. Maybe we get some type of action like last interest rates in December. You're talking about which central bank? Which because again, which one are you talking about? The BoJ, I've mentioned briefly the ECB, and or are you talking about the Fed? Because I do apologize, because sometimes these comments do lag, and they maybe already kind of moved away from this topic, and just be a little bit more specific. I really appreciate that comment, honestly. Thank you very much. Cigar and rocks, yes, let me know what you're talking about, which central bank you're talking about, actually. But yeah, look, with the UK here, it's we're seeing a little bit of retracement here on the FTSE 100. Yep. Oh, you're talking about the US, right? So, okay, if you're talking about the US, I mean, where's that? Back in December, what did we have back in December? Let's have a look. October time, December, November, December. Yeah, I mean, okay, like we had the drop, right? I mean, look, we're not going to get anything. So in December last time, we had a drop of interest rates, right? We had a cut of 25 basis points. Now, this time we're not getting that, but the like I said previously, the action could come in on during the press conference, because that's where, when he will say that, oh, are we going to go for more, are we actually, is he actually willing to go for more cuts, or are we going to be like on standby? Something tells me that there's going to be like this they have a few phrases like, we're worried about current economic restraints or something like that, basically referring to the tariffs and those implications on that, and implication of those tariffs on the economy. So that's what, like I said, that's where my problem is. Like, so they will say we're gonna be like data. It's like the same as like it was previously. Like, we're gonna remain data dependent, right? So I think that they might not say that they're gonna be data dependent, but they will be something like sound like something like that, right? Where he's gonna say that, oh, you know what? I think that, yeah, we need to be careful because we don't know what's gonna be happening with the tariffs, right? And what kind of effects we're going to have from the current tariffs that are already in place, and that's what they're worried about. So maybe he's going to be trying to be as neutral as possible. The only thing is that I think that he can't really be too neutral. He has to be a little bit more, maybe a little bit more aggressive in order to kind of bring the stock market back to the upside a little bit. Again, like I said, we're all speculating about this before the event. I keep on saying all the time, wait for the event, and then we can do something about it. But Cigar on Rocks, thank you very much for your comment. I really, really appreciate that. And honestly, this is what I encourage all the time, to have these debates, to have these conversations, because again, that's you guys who are watching this, you're also helping me out to switch my brain maybe in another direction, maybe because maybe I will say something that you didn't know, and maybe you will say something that I didn't know, and this is where we start we start the wheel rolling, and we come to something that maybe actually, wow, like we didn't know. So I always encourage comments. I always do so, and I will continue advocating for you guys to comment more. Thank you. So yeah, coming back to the FTSE 100, like I said, yes, the situation here is that we're seeing a little bit of a retracement. So I would say this way: as long as we stay anywhere above this 50-day EMA here shown as the green line, I'm going to remain somewhat positive. Let's have a quick look in the dollar index, and this one is, yeah, I mean, we're waiting for a drop below this 102.80 zone. If we can get a nice clearance of down, great. More sellers here could join in. So at the moment, and I have to kind of adjust my upside scenario here a little bit, because look, it's this level I talked about previously, the 103.20, but we're oscillating around that area, so it's not really helpful too much. 103.75, that's what I'm going to keep an eye on for the upside. If we can get a nice push above that, amazing. We'll get ourselves a nice double bottom here, and maybe this could be the neckline. Who knows? And we could maybe see a nicer correction here back up towards the 200-day EMA. So let's keep an eye on that one. But for now, for the downside, I am looking at this 102.80 zone. I like this area, nice good potential breakout area, but we need to see that clearance there. Let's jump into the Forex world very quickly. Hey, look, AUDUSD had initially a nice good pop, then it's a little bit of a mess here right now. I don't like it. I will like it a little bit later. At the moment, what I want to say here is that we're trading somewhat to the upside still, because again, we're forming these higher highs and higher lows. Let's say this way: as long as we stay somewhere above this this short-term upside line, which I just drawn, taken from the low of the 4th of March, then yes, there is a good chance for this one to push higher. However, I prefer to wait for a push above the 0.6408 zone, and then yeah, we'll go from there. Oh, I can see the comments coming through here. Okay, thank you. Do you think tariffs would be more beneficial for Russell over the other indexes? It has a nice inside day setup. Russell, let me just jump back into the Russell, into the indices very quickly. So Russell, look, well, tariffs, no, not really. I mean, in general, those are not beneficial. On the contrary, tariffs are, not good. The smaller the company, the worse it can be affected, because it, a lot of them don't have the the capabilities to withstand these issues. So in a way, again, this is debatable, of course, what I'm going to say right now, but this is kind of my opinion. And look, these companies, which are, let's say, in Russell, these companies are interesting. Yes, they do sound good, but when the times hit hard, they struggle. And when those companies start to struggle, if it's a good company, maybe it's, like I said, it's lacking some cash, and maybe it's lacking a credit line, and it cannot, save itself. So, but the product is still good. It is delivering. The company is still, in general, has perspective, but has, like, kind of good potential, not perspective, but potential. And this is where an opportunity for the bigger players to come in and buy the hell out of them, buy them out. So that's, like, in a way, every, like, little economic downturn, or an economic shakeup, it's not beneficial for the smaller players. It's beneficial for the bigger players, if those bigger players are cash rich, and they can buy out some companies. I think that Google recently kind of bought out some company. I just kind of flew out of Alphabet. Alphabet acquires Alphabet security Wiz for so Google's owner Alphabet has agreed to buy the cybersecurity group Wiz for, for $32 billion. And I mean, it's like yeah, I mean, it's great for, like I said, for bigger players to catch these smaller players. So if to answer your question, Cigar on Rocks, is it like would tariffs be more beneficial for Russell? No, not really. I mean, this, on the contrary, like for the stocks in the Russell 2000, this is going to be, like, devastating. So as you can see here, I mean, we have been drifting heavily to the downside since November. Even in back when, look, in January, when all the stock market, the bigger players, the Dow, the S&P, the NASDAQ were, going higher, and actually almost hitting their almost hitting their all-time highs. Like, for example, here you see back in February, actually in the beginning of February, S&P hitting new high in February as well. NASDAQ was good here as well in February. Russell was struggling, and it seems like, I think the market kind of knew that the market knew that when the new leadership comes in, and they're gonna start throwing out tariffs, and that might help, might kind of damage the smaller players. And I think that this is where the market already knew, and everybody was very cautious, from, like, buying stocks from the Russell 2000, and there we go, we got we got that sell-off. And look at this. I'm not even talking about the all-time high. I'm talking about this year's highs. And we declined already around minus 15% on the Russell for this year at one point. Now we're, like, around minus 11-ish. But at some point we were minus 50. I mean, that's from the highs. I'm not talking about the open. No, from the open. Where's that open? Let's find that open. January 3rd, the 2nd. There we go. January 2nd. This is where we opened up. So for the year so far, we're roughly around minus 8%. So that's a bit of a bummer, I would say. The S&P. Let's have a look at this one. Where's that entry? Where's that January 2nd, there we go. January 2nd, how much? 6. At this point right now, it's around not a full 5% loss. So that's what I'm saying. So unfortunately for the Russell, yeah, and it's not really, I don't see really a bright future here. Yes, we could see a bit of a retracement, and then, like I said, maybe the Fed will help the stock market to recover a little bit. So, but in terms of recovery, I'm kind of considering this, move towards this downside line and then maybe a drift back down. So let's see. Unfortunately, I do not have a crystal ball. I only have my leather head here on the top, and yes, I mean that's what I'm trying to use in these situations. But yeah, thank you very much, Cigar and Rocks. Thank you very much for for your comments, and I really appreciate your questions. So and like I said, if you do have more, honestly, feel free. I'm just gonna continue right now with Forex, and we'll go from there. So yeah, so AUDUSD, like I said, that's my scenario for the upside and the down. Oh, well, sorry, the downside is on a break of this upside line, and these EMAs. I'm not saying that I'm going to get very bearish, but it kind of increases the chance for a move lower. AUDJPY, the risk on risk off environment monitor. There we go. We've tested this downside line. Well done here. Now the question is, can we break this downside line, and can we break above the 50-day EMA? If we can do that, great. I'm going to consider a move higher. NZD-USD, nice pop. I talked about it on Monday. Cigar and Rocks. I'm very happy. I mean, honestly, sometimes, don't get me wrong, my brain is a little bit jumpy. And this is what I keep on telling to people, like sometimes maybe somebody might find it difficult to understand me. But look, I mean, my brain is jumpy because when I'm excited and, I want to say something, I really, there's a flow of different ideas that are a flow of different scenarios that are jumping into my head, and I'm really trying to kind of put a vector on those and deliver straight in a straight line. So but like I said, yeah, the jumpiness does exist, so I do acknowledge that. So hopefully you can understand me clearly, and yes, thank you very much. So NZD USD, nice pop here, amazing so far so good. I said about this, I talked about this, and I said that look, we do pop above this 0.5771 territory, I'm going to go a little bit higher. There we go. So far so good. We're seeing a little bit of retracement. That's fine. So as long as we do something like this, and as long as we stay above the 100-day EMA, I'm leaning towards the upside. USDJPY, something that we're watching very carefully today. If you are trading something US dollar related, of course, be careful today. I cannot stress this enough. Wait for like I said, wait for the press conference, and then you can do something about it if you are comfortable with. If you're not comfortable with that, just leave it. This downside line, I like it, but the problem for me is where the upside here, I have these EMAs. So if those EMAs get cleared, okay, that's amazing. More buyers here could join in. So, but with the BoJ, because they're we're seeing some sort of fear from the BoJ to go and hike more at the moment. That's where, like I said, that's where the problem could arise, and we could see maybe this pair actually pushing back up again because of the devaluation of the Japanese yen. We'll see. Let's wait and see. US dollar against the Canadian dollar, we're resting nicely on this 1.4279 zone. Let me just double check very quickly the news that are coming out. So tomorrow we're looking at the PPIs, and at the moment I don't see any forecast. Let me just double check another source on this one. Okay, Friday, Thursday. Where's that Thursday? PPIs year on year, right? Expected to drop to 5 something percent here. Okay. Right, okay, that's an interesting one. So we're expected to see some declines here, and okay, that's absolutely fine. Maybe, we're a little bit of a stabilization moment here. So maybe we could see Canadian dollar actually strengthening a little bit again, but let's say for now we're watching the Federal Reserve. US dollar against the Swiss franc, looking interesting, right? I mean, look, very technical, very exciting, and guess what I'm gonna say. If we're leaning for some lower levels, a drop below this little territory is required. That's the current lowest point of this month, and if we can get a nice clearance, lowest point of this year. If we can get a nice clearance of that one, I'll go for some lower levels. My next targets, it's plural, are going to be this one. It's very close. I do understand that. But then if that gets cleared, the next target is somewhere around here, the 0.8710 zone. I know, not far, but hey, I'm going slowly on this one due to the day what we're seeing here. EURUSD, very interesting. Very, very interesting because this whole area actually provided good resistance. Now, 1.0950, I think that that could become, like I said, a more interesting target. However, I don't want to really get rid of this 1.0936 I talked about. It's, in general, I would say it's just the whole area that is very exciting and providing fantastic resistance. So look, long story short, if we can get a nice clearance of that area, I will go higher. And at the moment, we already had a great run on the euro dollar, but like I said, especially with this day today, I mean, we could see some more interesting action here. For me, the only thing is that if I'm looking at the downside, okay, I will try to look at some lower levels from here. From this 1.0822, something like that. But my problem, like I said, there we do have way too many good obstacles here on the way lower. Like for example, with this 1.0760 is a good target, and the same 200-day EMA is a good target. So, but while we remain in this zone, I'm just observing the price action. Very quickly on EUROJPY, this one, there we go. We popped, and I talked a lot about this, and we have popped nicely. So, what can I say? So far, so good. I'm leaning towards the upside, and yeah, I mean, my next target will be this one, the 164.90 zone. And then if we can, you know, go further north, I will target this 166.68. So now then, Euro Aussie. You know what? It's a mess a little bit, but it's an interesting mess. It's like we've broken this downside line here, and it seems like we're, you know, seeing some nice activity to the upside. Now, it didn't. I have to admit, it didn't really work out as planned. Because we did drop below that 23.6, and I was hoping to see kind of a move towards this 38.2. But okay, the midpoint of the between the two levels played out nicely, and this is what I say sometimes, that look, not only that the Fibonacci levels are important, but also the midpoints between those levels are important as well, and this is a clear example. Look, at the moment, long story short, I would say this way: as long as we stay above this 1.7185 zone right here, and this is basically the highest point of 2024. If we stay above that area, I'm going to continue targeting the upside. GBPUSD, just a quick update on this one. Almost. We're almost there. 70.5, this is what I was targeting. This, in general, we've managed to reach that psychological 1.30 zone. That's great. That's amazing. This is what I was aiming for, and I talked a lot about this from Monday and from last week I talked about this. So we reached that, and great. What's next? Like I said, next is for me this 1.3040 zone, which is around the 70.5% here on the Fibonacci retracement, and then I'll go from there. It's near the high of near the highest point of November in a way, so like I think it's a nice good target. Let's aim for that one for now, as long as we stay above the 61.8 here percent on the Fibonacci retracement, which is on my chart roughly around the 1.2924 zone. Let's jump into the commodity world very quickly. Gold, look at this. I mean, we had a new all-time high this morning. I mean, we traveled towards that 3045 zone. Now we're drifting back down. It's okay. It's all fine. It's all, you know, nice and dandy here. Can it be maintained? But I don't want to rush into anything. I mean, it's interesting. Like I said, it's very, very interesting. But gold will be one of those that I will be very, very carefully monitoring today. Because like I said, if the Fed comes out and we support the US dollar somehow, we could see this one maybe, you know, drifting a little bit lower. But again, if the interest rates, you know, go down, then this is something that could benefit, or let's put it this way, sorry, the interest rates won't go down, nothing will go down. But if if we see the comments from the Fed, from Jerome Powell, that they're going to be, you know, in favor of going for some more cuts, then hey, maybe gold could, you know, fly higher. But in general, 3,000, ladies and gentlemen. I talked about this for a while now. I talked about this in my videos here on YouTube. Oh, wrong place, wrong broker. Anyway, ladies and gentlemen, I talked about this on, yeah, we always need to keep an eye on competition, ladies and gentlemen. You always need to know what the competition is doing. But what I talked about here on our Markets.com trading view channel here, I talked about gold, and I talked about this one a while ago, and I said, look, we're watching it. We were only like $50 away from hitting the 3,000 zone, and there we go, amazing, you know. We hit that level, so fine, I'm happy about this, and great. Now, like, you know, it overstretched it a little bit, and also something that I mentioned in my previous sessions about the, you know, potential target, and I talked about this Fibonacci extension basically, and look, it's subjective in a way. It's subjective, and it's something that, you know, we kind of you know, we need to be careful about. So 3,020 was my next target. I said, like, if we clear the 3,000 zone, I'm going to aim for the 3,020. We reached that one, and then I said, like, oh, if we could do nice clearance of that one, then I'll aim for this one. If we draw the Fibonacci extension this way from the lowest point of November of last year to the highest point of February, then and then the low of the 28th of February, then my next target is the 3,048. So we hit that nicely, amazingly. So that's fine, that's perfect, you know. And what can I say? The nice good move happened here, and now if we were looking for some higher levels, well, a clearance of this 3,042 zone is needed. But then what's our next target? Well, if we judge it by this Fibonacci extension, because again, these are subjective, and these are, you know, a little bit on the, how to say it, it depends on the interpretation. Then the next target could be somewhere around 3,092 zone, 91, 92. But at the moment, we'll see what's going to happen with this 3,042. If it holds, if it continues to hold, then a nice drift back down could be possible here. And a drift back towards the 38.2% on the Fibonacci retracement, which is drawn this way, and that's a little bit below the psychological 3,000 zone. Let's jump into silver very quickly. Silver is nice little retracement. That's fine, absolutely okay. 33.38 zone, I'm watching that one carefully. So far it's a good area of support, so if we do stay above that, I'm gonna go lean towards the upside. Now there we go. Now this is what I was talking about from Monday, ladies and gentlemen. Look at this. I said to you that, look, I'm considering a possible retracement. That's absolutely fine, but if it's gonna hold below this downside line, this retracement could be classed as a temporary correction before another possible leg of selling. But again, if we're looking at some lower levels, ladies and gentlemen, I would prefer still a drop below this 65 zone. So the fact that we're dropping back below the 67 zone, that's great, that's wonderful. The next target for me, like I said, is the 65.25 zone, and if that gets cleared, yes, amazing, a forthcoming lower low will be confirmed. For me, the upside scenario is on a break of this downside line. If I can get that, I'll consider some higher levels. Natural gas, this one's stuck, and I need to see a drop below the 3.95 to go lower. To go on coffee, we're seeing a hold up below the above this 50-day EMA. So as long as we stay above that 50-day EMA, then that's great. And if we can drop below the 50-day EMA, then yes, great. More sellers here could join in. We could target that 100-day EMA. Sugar has broken the downside line. This is one of my favorite commodities here to watch. And look at this, we've broken the downside line. We're now creeping up towards that psychological $20 mark. I talked about it, and if we can get that clearance, I'll go to the upside. Cotton, very quickly on cotton, nice little retracement. That's absolutely fine. And now the moment of truth will be if we can stay above this territory, above that 64.86 zone. If we can stay above that, amazing, wonderful. more buyers here could join in. So I'm keeping a close eye on down. And finally, very for the last thing here is the crypto world. That's like always, I leave it for dessert. Now, the crypto world, Bitcoin, of course, every crypto which is again, trading against the US dollar is watching the Fed today as well. Everybody's, the Bitcoin, you're trading BTCUSD, BCHUSD, ETHUSD, XRPUSD, LTCUSD, DOJUSD, DOTUSD. Keep your eyes on the US dollar today. Keep your eyes on the Federal Reserve. And if we see some strengthening in the US dollar, then of course we could see a further decline here on some cryptos, especially Bitcoin. So look, I'm keeping an eye on that 200-day EMA. If we can get a nice clearance of that one, amazing. I'll go further south. Bitcoin Cash here. This one I like. I really, really do. Look at this. Look how well it's holding up above. Look how technical it is in general. We're still holding above the crossroads of these two trend lines, and wow, I mean, this is very, very nice, very technical. And as long as we stay above those, then yes, I will consider a move back up, to be honest. If we start clearing the upside line, I will consider a move lower. And by the way, this downside line, maybe we can get rid of it. Oh, no longer needed. So if we do clear this upside line, I'm going to consider a move lower. Ethereum very quickly are still oscillating around the 1,900, waiting for the Federal Reserve. I'm not going to even say anything here because again, it's not really the most exciting at this point. Now, Ripple is a little bit more exciting, I would say, because it's near the 50-day EMA from the bottom here. If we can get a nice clearance of that one, and if we can get a nice pop above the 2.37 territory, yep, I'm going to consider a move higher. Litecoin is near the upside line, and, well, to be honest, something tells me that this could actually fall off the cliff if the US dollar strengthens. But let's see. Let's listen to what the Fed will have to say. So if we do clear this upside line and we clear this 82.95 zone, yes, a forthcoming lower low will be confirmed. Dogecoin, similar story. Again, we're still, for me, this looks like a bearish flag in a way, but I don't want to rush into things again. Everything, if it would have been a normal trading day, I would say, yes, I'm gonna lean towards this or towards that a little bit. But because it's not a normal trading day, ladies and gentlemen, we rather just stick to what we see right now. We have roughly an idea, but we kind of still wait for the main event to come out. And Polkadot here, this one's doing a little bit better, to be honest. Look at this, pushing back up, pushing towards the 4.62 territory. So if we can get a nice clearance of that one, and then yes, we can go from there. Cigar and Rocks, copper. There we go, copper. What do I think of copper? Look, this one has been rallying, and of course, the fact that China has been seeing some stimulus, from there, because look, in the beginning of the show, I talked about the index here, and my second index, which I talked about, was China. This one is feeling the love right now, and we know why, because the government kind of is stimulating the economy, and we're seeing maybe the PBOC will go for some rate cuts, and all this kind of brings this positivity. And in general, we see some Western investors going into China, investing into China. So all this is kind of quietly, pushing that positivity in the Chinese market. Housing is still a problem in there, but maybe they're going to get there. But like I said, once we started seeing that positivity coming through, copper, because again, we know that this is used heavily in everywhere in general, it started picking up. We could end up traveling towards this hurdle right here, this 5.1920 zone-ish. We're right now currently around 5, so I think this is quite doable, quite a good target to aim for. So but would I say that I've missed it? Yes, I've missed the breakout here, so I wasn't really paying too much attention on this one. However, this is all logical, and in general, if I don't like maybe the setups, I try not to chase. So for example here, although I believe that there is a good chance for this one to travel further north here, right? But would I like do something about it? No, not really, because again, it's like chasing the market. I don't like chasing. I don't really like chasing the market. So if it starts retracing back down at some point, okay, then it could become a little bit more interesting, because then what we can do is we can start applying some upside lines here. Again, every line is a tentative one. It's not something that you need to really, prey on. No, it's just something for you to help, for us to help out a little bit here. And maybe this could, play a nice role, and we can stay above this upside line. If let's say if it does retrace back down, then if it stays above this upside line, great. This could be an opportunity for the bulls. But if it starts clearing this upside line and we fall back below the 4.83 zone, hey, then maybe I would say let's start examining the downside. So keep your eyes on it, because like I said, it could be quite interesting. And for now, yes, I'm still somewhat positive on copper, but did I miss the rally? Maybe I could maybe still catch something to the upside, but the risks are still are becoming greater that this could retrace back down a little bit, and then it could push higher. If you're, let's say, buying this one without leverage, then that's fine. That's you can go whatever, you can keep it for, because then you're buying it for like several years maybe, or something like that. So just be careful again. And of course, if you have leverage, if you have no leverage in there, maybe you'll have a very wide spread, so which maybe makes it a little bit less attractive to buy. So again, just keep your eyes on this one. It's an interesting one, but like I said, are we a little bit late to the game? Probably, but it's, hey, if it doesn't, if it retraces back down, hey, that could be quite interesting. This is what I was talking about sugar. Like, when we broke this downside line, I said, oh, you know what, I missed this maybe, but I was quite positive about sugar. Then we retraced, then we dropped all the way to 18, and now look at this. I said that if we do push back above that $20 mark, hey, I'll get a little bit more comfortable with the upside, especially if you also clear this 200-day EMA. So, ladies and gentlemen, let me just close off, have the polka dot chart at the end, because that's the kind of ritual that I have. I have a crypto here, and here I have polka dot. So look, the polka dot is doing quite well, I would say. But again, the same story watching the Fed today. Ladies and gentlemen, I would like to thank everybody, and especially Cigar on Rocks. Yep, well, thank you very much for your comments. Really appreciate that. I'm waiting for it pulled back as well. Should come back further than them breakout traders. Yeah, like I said, yes. I keep advising everybody, never chase the market. And oh, by the way, ladies and gentlemen, I'm going to be having a webinar soon. So stay tuned for the announcement. So if you register basically on our platform, then yes, you will be able to access this webinar where I'm going to talk about trading psychology and everything. I'll give some examples from my past as well. So, but stay tuned, because like I said, I'm gonna release the announcement soon, and we're gonna release the announcement soon. And yeah, hopefully during the next show on Friday, I will let you know exactly when that's coming out. And yeah, like I said, it's a closed event. It's going to be on Zoom. It's like a separate webinar, so it's not going to be like initially it's not going to be available on YouTube or anywhere, but we'll see later on. Maybe we'll throw it after some time. But hey, ladies and gentlemen, thank you very much. Thank you for watching. I really appreciate your time, your views, your likes, your comments, everything. I really appreciate that. So as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And don't forget to subscribe. Thank you very much, and I'll see you later. Bye-bye.